What's going on, traders? My name's Carlos, and in this video I'm going to be giving you 5 tips to grow a small forex account.
Is it real? 'Cause you're on the block.
So tip number 1 is stop over leveraging. As a new trader and even as a very experienced trader, this is a very common problem. A lot of people get into the markets, they want to make money really fast. They want to flip a $100 account to 500 to 1,000. They set a leverage of 1 to 200, 1 to 300, 400, 500, or even 1,000. Immediately they go into the markets, they drop a, let's say 1.0 on a $100 account. Right away, 1 pip, boom, takes them out the trade. They're looking at the markets like, what the fuck just happened? The broker is betting that you're gonna take that high leverage, try to flip your account from small to large without actually understanding and knowing what to do. So right away, if you're choosing a high leverage, you're already at a huge disadvantage because the pip value is different. Everything is a lot higher, meaning that you're risking a lot more, even on a smaller trade. So even if you're entering, let's say a 0.01, that could potentially be a $10 risk per trade. And if you're on a $100 account, that's 10% every single trade. You don't want to risk $10 on a $100 account every single time into a trade, because then you only have 10 tries to actually get to where you want to be, which is potentially 200, 300, and then just keep growing from there. So remember, high leverage, yes, means more money, but a high leverage also means you're risking a lot more money onto your account, which ultimately isn't worth it. If you use a regular leverage of, let's say 1 to 50 or even 1 to 100, that's enough for you to grow and maintain your account and keep growing it for the future, which is the goal. You want to keep making your money as you go. Tip number 2, assess your risk before you assess your reward. A lot of traders have the bad habit of looking at the trade and the return before actually understanding what they're potentially risking. For example, let's say I'm looking to enter USD CAD. I want to make a $200 return on USD CAD. Already, I'm not accounting for any type of risk. I just want to go into the market, make my 200, close the trade, and then look at another market. You want to go into USD CAD thinking, okay, I'm going to go into USD CAD. I'm going to risk max $50 on my $1,000 account, and then from there, I'm looking for an ROI of 1 to 2%, whatever that could be. That's how you want to go into the markets. You want to go into the markets understanding how much you're willing to risk before understanding how much you want to actually gain out of the trade. Once you understand how much you want to risk, then you can proceed to think, okay, so I'm risking this much. Is it worth risking that much to make this type of gain inside the market? You always want to understand your risk before your reward. And that's a big error that a lot of traders make when they're learning how to trade. The third tip that I have for you guys is honor your trading plan. So if you've been trading for a while, if you have a trading plan, if you know that you're going to trade these 5 major pairs at 9 to 5, or you're going to trade these 4 minor pairs from 12 to 3, and then go to bed, wake up in a profit, and then take out your trade, stick to that trading plan. Don't jump from one trading plan to the other. Stick to what you know works. Backtest on your demo account. And then once you understand what's working for you and what's growing your account, then transition to live and stick to it. A lot of traders break out of their trading plan because of one loss. What happens is a lot of traders go on a win streak, for example. They win 1, 2, 3, 4, 5 trades, and then they lose that one trade, and then they go, okay, what happened? My trading plan's perfect. You know, nothing's ever perfect in the markets. You're gonna come across a loss, and when you come across that loss, you want to stick to what you know. You want to keep doing it over and over and over because you know it works. If you know it works, why are you going to change it? If it's not broke, don't fix it. So just keep going, keep going. Don't change your trading plan based off how you're feeling or what's happening. Stick to what you know. Which brings me to my 4th point, which is keep a trading journal. A trading journal is really going to help you when you're learning how to trade, because you can really assess where you went wrong in the trade and learn from your previous mistakes. So if you're not documenting your mistakes, if you don't know what's going on, if you're just entering a trade, losing or winning, and not sure why you're losing or winning, then that's also a big problem. You always want to understand, if you won, why did you win? If you lost, why did you lose? Trading is a never-ending learning cycle. You can always learn from your failures. You can always learn from your mistakes, and you can also learn from even your wins. I know my personal trading journals, when I go back and look at them, I open them up and I'm like, holy fuck, I learned so much in the last 3 years that I've been trading. I've went through so much trial and error, and seeing the accounts and the people I've traded for within those 3 years is something that you'll feel really proud about as you keep going and as you keep trading. And my last and most important point, treat trading like it's a career path and not a hobby. Think about it like this. If Kobe Bryant went into the league, if he went into the league thinking, you know, I love basketball, I love playing, so I'm just going to keep playing and just casually play throughout the NBA because it's something I just love doing. It's a hobby. I'm going to shoot my 3, I'm going to take my layups, my dunks, whatever the case may be, and just keep doing it because I love it. Do you think that Kobe Bryant would have won 5 championships if he had that mentality. If he thought basketball's a hobby, I love playing basketball, so I'm just gonna keep doing it. No, he went into it thinking, I want to be better than Michael Jordan. I want to be better than Wilt Chamberlain. I want to be better than all these other NBA players before me, because I know if I take this as serious as it is, I treat it like a career, it will get him to where he wants to be in life. He will become the best in the league. He'll become the deadly shooter that we know today. And that's what makes Kobe Bryant Kobe Bryant, is because he thinks this is a career path. He never thought of it as a hobby. He thought of it as something that he wants to do for the rest of his life and excel at it. He wants to be the best. Same thing with trading. If you look at trading thinking, you know, I love trading, trading's fun, I want to make some money here and there. Today I made 10 bucks, tomorrow I made 20 bucks. That's all it'll ever be. You'll only make small returns, small profit. The second you switch your mindset and start to think, okay, trading can be a serious career path. I can be a hedge fund investor. I can be a private investor. I can accept clients. I can start a business, whatever the case may be. The second you start to think seriously and take it like a career, that's when you'll start to level up trading, because every single day you're trying to outwork yourself. You're trying to do better, take better trades, get more capital, find more clients, and ultimately just make more and more money every single day. Trading isn't just a hobby. It's a full-blown skill set and it's a business. But anyways, guys, that's it for this video. If you learned something in this video, please drop a like. It'll help me a lot. Share it with a friend. Comment your ideas if you have any more tips for any other traders, if you're an experienced trader yourself. And make sure to subscribe to the channel. I'll be uploading a video every single week. So I'll see you guys next week. Take it easy.